artificial intelligence.
AI.
Will AI cause the destruction of the human race by robot overlord? Or transcend us all to tech utopia? Like AI generating this entire film? Just kidding, I'm real.
Or am I?
Either way, we're also seeing a boom in AI-related stocks. But is it just a bubble that could imminently burst? Or will this exponential growth continue for the foreseeable future? And how might investors try and ride the AI wave? The total size of the artificial intelligence market is expected to increase 20-fold in the next decade, from just under $100 billion in 2021 to nearly $2 trillion in 2030. Or, if you're Cathie Wood at ARK,
we believe these technologies are going to scale in the global equity market to $210 trillion by 2030.
So we're talking big money, and that has increased investor interest. But what ways are investors accessing the AI market? One method that has made big headlines in recent weeks is through chip makers.
Another good day for the chips. Nvidia briefly hit that $1 trillion mark.
Artificial intelligence requires enormous computing power, which in turn requires powerful microchips, or GPUs. If AI is the new gold rush, then GPUs are the mighty mining machines making it happen. And there's one company that dominates the GPU space: Nvidia. Nvidia's share price has risen over 160% in the year to date. It rose almost 30% in a single day, gaining the equivalent of the market cap of Shell after blowing out expected earnings estimates. AMD, another GPU maker, is close behind, having gained almost 90%. And Intel in third place, with a gain of almost 20%. So why has Nvidia exploded so much? Well, every Tom, Dick and Harry has probably been telling you about ChatGPT down the pub. Or guess what? Nvidia's chips are the brains for most of these AI chatbots. And the expectation is that many more will be needed to power these and future generative AI endeavors. Nvidia also enjoys an enormous 95% market share of machine learning GPU chips, according to New Street Research, with its Nvidia A100 chip becoming the de facto standard in the generative AI space. But things may not all be AI okay. There are claims that this recent surge, not just in AI stocks, but the stock market in general, could be a baby bubble.
There's no question, I think, that we have a price bubble.
So let's dive into the data and see what we can find, starting with Nvidia's stock. Nvidia is currently trading at around 40 times its price to sales ratio and around 220 times its price to earnings ratio. This is far above the sector PE median of around 25 times and way above its own historic levels. AMD is currently trading at a whopping 520 times its price to earnings ratio. That's almost 10 times its 2021 ratio of 55 times. Some analysts have drawn parallels between Nvidia and Tesla's meteoric rise to a $1 trillion market cap. Elon Musk's AI-powered electric car company shed around 70% of its share price soon after. Let me know in the comments if you think Nvidia could go the same way as Tesla. So does this mean that they're overvalued? Or are these valuations justified by potential future growth?
In terms of the valuation of some of these stocks, yes, they do look potentially a little bit rich, but if the exponential development in AI keeps going, then of course there could be potential further upsides. I think a lot of traders who've been around a little bit longer, they're very much looking towards the dot-com boom. If you take a company like Cisco, their market cap was enormous, and it took them ages to be able to recover. So I think some people potentially are looking to develop parallels with Nvidia, but at the moment, in terms of business case, they're very much benefiting from this AI boom. It's very much just a case of can the financials keep up with the development of AI.
So if AI continues its development trajectory, Nvidia and other chip-making companies may be well placed to capitalize on this. But that trajectory may be influenced by where the chips come from. And here is a scary but incredibly important fact about chip companies and AI. The majority of them are extremely reliant on one single company. And that company resides in one of the world's most geopolitical hotbeds, Taiwan. The Taiwan Semiconductor Manufacturing Company, or TSMC, creates almost all of these incredibly specialized chips for the likes of Nvidia, AMD, Google, Amazon, Microsoft, Intel, and more. You could actually invest in TSMC.
Taiwan Semiconductor is one of the best managed companies and important companies in the world.
It's a publicly traded company. It's up over 30% in the year to date, and compared to Nvidia, it trades at a more historically average price to earnings ratio of around 16 times. But the issue of Taiwan's sovereignty has the potential to not only affect TSMC's stock price, but also bring the whole AI house of cards crashing down.
It's definitely something which the US are aware of. China, they're trying to ultimately provide their own supply chip industry with kind of the resources it needs. But this isn't something which can just be turned on overnight. TSMC is very much, when it comes to fabs, the main player. I know we've got the likes of Intel trying to replicate some success on that front. But from a market's perspective, I think really need to be aware of the geopolitics, as TSMC, from a geostrategic standpoint, is very much a key potential source of focus for this conflict.
So chip makers are one way for investors to access AI. And if you believe in its future, we may see continued growth in the companies that dominate their space. But be wary that some could be overvalued right now. So, what other ways can investors access the AI space? Well, mega cap tech stocks that have their techie fingers in the giant AI pie have also enjoyed a boost, with Apple, Amazon and Microsoft up around 46% on the year to date, and Alphabet around 38%. In fact, these four companies plus Nvidia make up for 24% of the S&P 500. But around 75% of its gains since the October low. If you take them out, the S&P 500 has actually had negative returns since then. So why are these tech companies still in the green whilst there are so many economic headwinds? And is it just AI causing it?
AI is clearly a dominant theme within the tech space, and yes, like I said, for Nvidia, of course, it's had a huge potential impact on the company. For some of the other tech names, it's not necessarily as clear how much of a role AI is playing. At one point, some people are saying that's a potential flight to quality, i.e. when there's risk aversion, people go into these names, which almost kind of seen as America's almost blue chip companies now. I think it's very different to kind of when the internet was a new thing in the early 2000s. These are all established companies.
So the question is, could there be even more upside on some of these big tech names?
I think if we do see some risk aversion, then yes, potentially we could see almost like a perverse reaction here where we do see some upside for some of these tech names. I think the only point that they look potentially vulnerable, and this is something which you have seen in a few recent trading sessions, is if people want to rotate out of large cap tech and into other sectors.
Before we continue, a reminder that here at Capital.com, we make explainer videos about trading and economics, giving you insights on the markets so you can make informed trading decisions. We're also a trading platform, so you can make your trades right here on our website or using our app. After this, check out our recent explainer on the price of silver. Okay, back to AI and the big question. Could we see this tech bubble burst? Let me know in the comments what you think.
I think inevitably people are going to compare and contrast with the dot-com boom. However, though, that kind of, saw the kind of the collapse of a lot of these smaller companies who didn't necessarily have a good business case. I think if you're an index trader looking at the S&P 500, these are all well-established companies. Could they potentially see some downside? Yes, of course they could. But in terms of the mass market sell-off that we saw in the dot-com boom, I think that's potentially overstated at this stage.
Thanks for watching. Remember that the price of stocks and shares may vary depending on changing market conditions. You can read more of our analysis by clicking on the links in the description below. And don't forget to subscribe to stay alerted for our regular chart analysis videos each week and other explainers on big financial topics of the day.